Okay, let's dive into this explainer. Today, we're unpacking a really fascinating piece of market analysis from author Adani, set right in the middle of the summer of 2026. It's titled The AI Hangover and Bitcoin's Silent Wave. If you've been watching the tech and crypto markets lately and, wondering why things suddenly feel so incredibly quiet, well, you're in exactly the right place. We're going to break down the hidden mechanics behind this current market calm and figure out what is really going on behind the scenes.
Adani starts us off with a brilliant contrast to really ground this whole analysis. He paints this incredibly vivid, relaxed picture of a Canary Island beach. We're talking sweet mojo sauce, a cold tropical drink, a nice ocean breeze. But, as he reminds us, and I quote, "Disconnect from the Wall Street whirlpool, take off your flip-flops, money doesn't sleep, even if we are relaxing on the sand." It's a fantastic metaphor. He uses this peaceful beach scene to sharply contrast with the hidden turbulence and massive structural shifts happening literally right under our noses in the global tech and crypto markets. And that brings us to the core question driving this entire explainer. Right now, there is a very distinct murmur on the tech trading floor, and honestly, it smells a lot like a resaca, a hangover. The big question is the famous artificial intelligence bubble actually deflating, or is this simply a brief calm before the next massive surge? And more importantly for us tracking digital assets, how is this dead calm affecting Bitcoin and the broader cryptocurrency landscape? Let's just look straight at the data, no sugarcoating.
Moving right into Section 1, the AI summer hangover, let's look at the clear signs of beach fatigue currently showing up in the generative AI sector.
When we actually navigate through the on-chain data and intermarket capital flows, there's a correlation that very few people really want to acknowledge right now. Basically, Bitcoin's volatility is going to sleep. This flattening of volatility is coinciding exactly with the moment that the loud, banging drums of generative AI hype are starting to show some major fatigue. Now, it is absolutely crucial to understand here. We are not talking about prices crashing or falling off a cliff, not at all. We are talking about a purely mechanical behavior. As the AI hype cools down, Bitcoin isn't crashing. Its wild swings are simply flattening out, establishing this surprisingly quiet baseline.
Which takes us to Section 2, the fading NVIDIA effect, where we'll see how the financial waves are no longer breaking on the shore like they used to. Now, what's really interesting about this slide is the stark contrast between the recent past and our current reality. If you track the Asian markets first thing in the morning, you know this intimately. 6 months ago, the NVIDIA effect, meaning any news, earnings, or rumors surrounding the AI chip giant, would send massive shockwaves straight through the crypto market. Today, it barely moves a hair. The wave has simply lost its power. So you have to ask, what is actually happening with artificial intelligence right now to cause this kind of massive disconnect?
To answer that, let's enter Section 3, a global AI divide. We're looking at the two highly divergent paths the AI industry is currently taking around the world.
First up, let's look at the West, specifically the US and Europe. Major players here, think OpenAI, Google DeepMind, Anthropic, they have essentially slammed face-first into a monetization wall. The harsh operational reality is that AI currently costs way more to run than it actually generates. The inference and train costs are just brutal. So the crucial takeaway here is that the market is no longer rewarding the cheap hype of a new viral chatbot. No, it demands real integration into B2B business models that can actually generate steady cash flow. As a result, venture capital is cooling rapidly. And for Bitcoin, well, it loses its shiny narrative as an exponential tech bet and starts acting a lot more like liquid gold, mature and far less volatile.
Now, contrast that entirely with the East. Over in places like China, South Korea, and Singapore, AI isn't dead at all, but it has taken a purely utilitarian turn. Big players like Alibaba Cloud, Baidu, and SenseTime are entirely focused on industrial and quantitative AI. Honestly, they don't care at all about viral consumer chatbots. They're busy building algorithmic trading systems, optimizing incredibly complex supply chains, and running real-time sentiment analysis. It's a strict efficiency over hype approach. But you might be wondering, how exactly does this utilitarian approach in the East impact crypto markets globally?
It impacts it through something known as smart liquidity. This brilliantly illustrates exactly why the market feels so incredibly boring right now. These Asian AI-driven trading bots are no longer trying to mine wild volatility swings in Bitcoin. Instead, they are silently, constantly arbitraging the tiny price differences between centralized exchanges, like Binance, which by the way can't even be used in Europe anymore, and the decentralized finance, or DeFi ecosystem. This constant high-speed micro-trading mechanically flattens Bitcoin's volatility curve. It artificially injects this massive layer of stability that is frankly currently frustrating short-term traders to tears.
Let's pull the curtain back even further in Section 4, following institutional capital. It's time to follow the money and see what the hedge funds are actually doing behind the scenes.
You see, Bitcoin doesn't actually need wild 20% daily swings to survive. What it truly needs is the solid confidence of institutional capital flow. Just take a look at the shift in strategy. In the past, hedge funds were happily rotating capital, taking long positions on AI through NVIDIA futures or tech ETFs, and simultaneously taking short positions on crypto. But in the present, they have completely pulled the handbrake. They aren't risking nearly as much. Instead, they're parking their capital on the sidelines in cash and short-term bonds, literally just waiting to see which way the wind blows now that the purely speculative impulse of AI has faded.
So, when AI stops being sold as the new internet that will change everything tomorrow, it is instead finally accepted as just another standard work tool. Where does all that sidelined institutional money go? Well, it takes two clear paths looking for the next disruption. Path number one, it seeks a digital store of value. We're talking institutions aggressively returning to mature, highly liquid assets like Bitcoin. Or, path number two, it seeks operational utility networks. Basically, they're looking for the real internet of value in blockchains that actually do operational work, like Ethereum and Solana.
And this brings us to our final section, Section 5, Embracing the Market Calm. Let's zoom out, look at the big picture, and return to our relaxing beachside perspective.
The absolute key takeaway for your own portfolio is this. Do not expect Bitcoin to suddenly skyrocket just because AI hype is cooling down. Instead, you should expect volatility to compress even further. The market is definitely going to remain somewhat boring in the short term while the masses digest a fundamental shift. We're talking about the transition from the old view, where AI was seen as a direct magical rocket to the moon, to the new view, where AI is finally understood to be a massive diesel engine of efficiency. It's powerful, yes, for sure, but it requires immense amounts of time and capital to actually scale properly.
I really want to leave you with Adani's final piece of advice, what he playfully calls his special bochinch, or his insider beach gossip for us focused learners. He says, the calm is not your enemy. That the market is in beach lounger mode doesn't mean it's dead. It means the big players are dealing the cards for the next play in silence. This flat period isn't a graveyard, guys. It is a highly strategic mechanical repositioning phase where the smart money is setting up its next big move. So, put on some sunscreen, don't let yourself get carried away by market panic or the siren songs of self-proclaimed gurus, and keep your financial house in strict order. Because the real question you need to ask yourself is, are you prepared for the market's next silent wave? Take a hard look at how your own portfolio is positioned while the big players deal their cards in the shadows. Thank you so much for joining me for this explainer, and we will see you on the next wave.